Hello and welcome to another edition of Beyond the Blueprint podcast. I'm your host, Jeff O'Donnell, and joining with me today is Lauren Rogers, partner at Veritas Equity Partners. Thanks for being with us today, Lauren. How are you?
I'm wonderful. Yeah, thank you for having me.
Excellent. So let's kick things off. Could you tell us a bit about your role at Veritas Equity Partners and how you got started in the real estate business?
I can. I will try to keep it somewhat short and sweet, but my background is in tech. I sold cloud for 7 years, worked at AWS, which is part of Amazon, and a few other tech companies. I started looking into real estate as a personal investment because I was getting tired of paying taxes and having RSUs that didn't give me any cash flow. And I was thinking maybe at some point in my life I would like to be in a position to do something other than sell tech. So I needed to start considering other investment avenues. And through that process, I was connected to a gentleman, Alex Birch, who's now my business partner, who had been doing this for 15 years on the side while working in tech and had a couple hundred units all throughout Washington, focused on a really specific niche, and had now reached a place where, he had friends and family asking to get in on these deals, and his mentors were encouraging him to go bigger with this. I think he was thinking, I am going bigger with this. Every dollar I have is in real estate. And they were like,
Right.
no, you need to allow other people to benefit from what you've learned and get in on investing with you. Hence, really the start of Veritas. It just so happened that we met at a time when it made sense for both of us to take the entrepreneurial leap, and that's what we did. So that's kind of how I ended up. It's been about 2 years now that I've been in real estate, and I primarily have been focusing on more of our marketing and getting our name out there, that component and capital raising essentially. But I'm also now moving more heavily into the asset management side of our business.
Awesome. And how's that transition been?
It's interesting. Whoever says real estate is passive, I think that's kind of how I was drinking the bigger pockets tea, right? Of like, oh, I'll just buy, a duplex and it'll be easy, and this is, passive way to make money, which there is no such thing.
Right.
Well, certainly not with real estate. You're dealing with real people and people's homes, and it's a lot of work. So I think in this market, it's really important that your operations are extremely tight and you're very intentional, focused on retaining tenants, smart moves when it comes to how to improve properties. And it's a very nuanced thing, and this is my first cycle. Luckily, I'm learning with someone who's been through other cycles, but transparently, I think from what I've heard, there was a time when you really couldn't miss in real estate and people were getting great returns kind of no matter what. And it's we're in a different market right now.
Yeah, no, that's for sure. Okay, so now looking at the broader industry, what are some of the biggest shifts or trends you're currently observing in the real estate market?
I would say, first of all, my stance is that it's really real estate is hyper local. So some of these macro trends, while I do follow them, I am not hyper focused on them because I think, obviously the Sun Belt is having some problems. And my whole thesis is I like to buy in places that are supply constrained and there's not enough housing, historically, and permitting is behind, and it's a hard place for developers because land is so expensive. And the greater Seattle area, Puget Sound area is one of those places. So that's my thesis on, why we're seeing some unfortunate problems in Texas and Arizona and the Sun Belt in general. You know, obviously people rushed there from COVID. I also think you got to look at the economy. You know, where are the big companies? What cities historically have had really strong economies? What places do people want to live? There's reasons that people want to be in Seattle and California. Now, California has an entirely different set of issues, right? So I'm not advocating to put your money there. I'm just saying that they do have strong economies and people want to live there because it's a nice place to live. So I don't think it's inflated by things like COVID, but the macro trends still hold somewhat true in our region, but we're not seeing rent declines. You know, we're holding a little bit more flat than we have historically. So maybe not the increase. I would also say, I think on a macro level, there's deals to be had right now. There are owners who need to sell and or want to sell for whatever reason. I'm not going to say that there's massive distress. We're not seeing massive distress in our area, at least. But sometimes people just want to get out of a deal for a personal reason. Doesn't mean they're distressed. It just means I'm not going to wait 5 more years to ride this cycle because I need this money for X reason. So I think I'm seeing sellers be more realistic on pricing, and I think it's a good time to be buying.
Awesome. So you say dealers and owners want to sell. That's something you're seeing in your line of work then?
I am. Yeah, we've bought several deals this past year with incredibly good basis. And it was not because they were being forced to sell like they were underwater the way, again, I would say, and maybe in the Sun Belt, like that is happening where they're taking massive haircuts and literally like their buildings are not cash flowing and they're being forced to sell. That's
Right.
not the situation here. But we have had some, people have a medical emergency or they got into a building and they actually hate real estate and just threw their hands up and didn't want to manage it anymore. And they're taking a massive haircut, but by choice.
Right.
But they are selling the building for a lot less than what they paid for it 3 years ago. And the comps are saying that even more recently, these deals in particular markets around Seattle, the comps are very competitive. The cap rates make sense to buy. They're cash flowing deals. They're actually cash flowing very nicely, and there's still room for rental increases. And some one building, like the guy just got tired and has 4 units that are like complete, like he half renovated them and they're gutted, and then he just walked away. He was like, I hate
Oh
this.
wow.
So I'm like, these are the types of things I'm talking about, where I'm like, there's some people that even though they are probably they realize that this is not the best time to sell, they want to sell.
Right. Yeah. Okay. So yeah, it sounds like managing those financial variables can either be a real headache or an opportunity there.
Yeah, I think there's a lot of opportunity right now. I think holistically, I think that is kind of a macro trend that, as I talk to operators in other regions too, that they feel like it is a good time to be buying. Sentiment has been a little bit low, a little bit hard on multifamily coming out of the COVID boom. Now, the downside of that is it's, from what I've heard, like harder to raise money right now because of that. But usually, when sentiment is bad, it's good to buy when things are down. It's good to buy when sellers are wanting to negotiate, and
Right.
that's what we're at least seeing in our market. And also very little supply. Permits are down and builders don't really want to build in our region because land is so expensive. And then with everything that's going on with tariffs and at a macro level, it's just hard for them to make things pencil right now. So it's not that we have nothing new coming online, right? But we don't have enough to support the amount of people that live here.
Right. Okay. So now beyond that, what's currently working really well for Veritas Equity Partners?
What's working well? Well, I mean, one, we're having a lot of fun. I think that we are good at managing these smaller buildings. We don't have on-site staff, so we're very different than like an institutional model. And there's a lot more upside if you're willing to maybe take on the headache of some of these smaller buildings. So I would say we've
Right.
created sophisticated operations when it comes to how do we manage this type of tenant base, this type of deal, and how do we buy and underwrite these types of deals. And that seems to be working for us really well right now and resonating with our investor base.
Oh, very nice. So on the flip side, what areas are you finding most frustrating?
Hmm, frustrating. Um, I would say there's always learning, and there's asset management is a little bit of a guessing game and trial and error, like we have access to so much data, but it's changing constantly. That there is an art and science when it comes to, maybe right now is the time to retain tenants and not necessarily push rents. Um, the reality of real estate and why I like it is like our debt is 10-year fixed debt. So we're not putting ourselves in a position to we're not sweating like, oh my gosh, worst case scenario, we'll never lose people's money. We have time, and you can hold and
Right.
wait for an upswing. They're still cash flowing, so we're never, it's not bad, but it's a little bit like, okay, rents were rising aggressively, and maybe we need to balance, like taking care of people, right? And figuring out where the market is at and doing a lot of due diligence around, what really is reasonable. And it costs a lot of money to turn over a tenant. So you've got to really balance your strategy daily.
Yeah. Right. For sure. So here's a fun question. If you had a magic wand and could fix just one thing in your business that's holding you back or slowing you down, what would that one thing be right now?
Well, there's an obvious. I think my magic wand would be to raise endless amounts of money. capital raising capital raising is hard. I think in being around 2 years, I'm incredibly proud of what we've done. I'm incredibly proud of the amount of investors who have advocated for us and brought what we're doing to their friends because they've had a good experience so far. And managing people's money is a huge responsibility. I think nothing goes farther than a referral. So I'm really proud of the investor base that we do have, but it is very frustrating to underwrite a phenomenal deal and not have the capital available to buy it. And so I think if we could, get ourselves out there more and get in front of a lot more people and explain our thesis. We tend to have a high close rate. I think our thesis makes sense even when we talk to people who are much, much more experienced, institutional multifamily investors, people, that are extremely high up at institutions. They will say, oh, the real money is in workforce housing. It's not in a class, you know, 400 unit buildings. You are doing the exact right thing. Keep doing just what you're doing. And yet, educating people about alternative investments takes a lot of work. I think we have a country that, in a lot of ways, is pretty financially illiterate, and there's a lot for them to learn and digest, and then to feel comfortable, with an alternative like multifamily investing. I just wish that people were being presented with better advice when it comes to tax strategy and overall wealth planning. I can't tell you how many clients come to us and they're basically at retirement age and they haven't thought about cash flow, and they have a ton of equity and they're wealthy. And it just seems like this all should have been avoidable, and why didn't your wealth manager, I'm not a wealth manager, so I'm not responsible for looking at someone's overall portfolio. I don't necessarily, I engage at some level in those conversations, because people come to us and say, now I'm in this problem. And also, I would say that I'm not saying, we've had some wonderful wealth managers who have referred people to us because they're doing what's right for their clients, but this is not something that they make money off of.
Right.
And it's concerning to me, I think, how many people are positioning, DSTs or REITs or just down on real estate altogether, because that's not something that makes them personally money. And so it's on individual people to do the research to figure out, what do I need to do to set myself up for a happy retirement. So that was a very long answer, but I think it ties into capital raising, because I'm starting at a very basic level of education with people of like, hey, I'm not claiming to be, an expert here. Like, bring in your CPA, bring in your wealth manager. But then when their wealth manager is like fighting them on a very small portion of their capital stack being put into real estate, it indicates to me that that's not in line with what the client is asking for and wanting. So,
Right.
not a situation I'm running into every day or anything, but
Right.
I see it enough where I'm like, I just wish people would learn more about the beauty of real estate, really understand the tax benefits and the cash flow, and how, if done, if done well, it's over a long period of time. You don't have to invest with me, but like, invest in real estate, do it yourself, invest with someone else that you know and trust. But it's a really good wealth generation strategy.
Nice. Very
Yeah.
nice. So, and looking ahead, where do you envision Veritas Equity Partners being in the next 6 to 12 months?
6 to 12 months. Our business has shifted a little bit unexpectedly into doing some more JV deals with higher net worth clients. So we typically have syndicated all of our deals. We're looking at between 50 and $500,000 checks, primarily from individuals. We're going to continue that part of our business for sure. We've got one closing in a month, and we will do another one this year. But we're also talking to some people about, who are tired of owning their strip mall. One of them has an office building. People that love real estate, that understand real estate, that have made their money off of real estate and are in a position where they're saying, I'm no longer interested in managing it, but I know the beauty of it and I want someone else to do it. So I would say we're going to try to focus on a few of those clients and doing a really good job for them, and building out, a strategy where we can continue their legacy and help them with wealth, generational wealth transfer to their kids by getting them into multifamily. So and we will continue to buy in the same markets that we've been buying, and we only buy workforce housing in Washington State, and we stay under that $15 million price point, and we do only one thing and do that really well.
No, that's amazing. So, are those part of your big goals for growth?
Yeah, that is part of our big growth strategy. It's happened somewhat organically. It's not something that we necessarily targeted, but there seems to be more and more of these people that are in this bucket of like, hey, I want a 1031 out of something, and I really like multifamily. I just don't know how to manage it. And I'm very interested. I'm looking for the right partner to help me make that transition. So I think we will be a little more heads down on those conversations, those ones that are already in action, and then potentially targeting more people that are in that boat.
Okay. Now, is there anything else you'd like to discuss before we finish up?
Oh man. Um,
It's a loaded question, I know.
yeah, it's a loaded question. I mean, I would actually ask you, I'm curious what you're seeing on a macro level, and you're welcome to disagree with me, but you talk to a lot of people, I'm sure, for this podcast. What's your thought on the overall sentiment and specifically multifamily?
No, I actually what you said resonated with me, so I'm in agreement with you, to be honest. Um, yeah. So
Nice. Yeah. I feel like podcasts, I get to do a lot of talking, so
right.
I wish I could hear your perspective, of course, is very interesting too, because you have a lot of interesting conversations, operators all over the country. And like I said, everything's a little bit niche too, which is why I caution people to, observe the headlines, but I think it's just not relevant to every market. You've really got to, down to the street, things can matter. So when people
Yeah.
generalize multifamily, I don't think it's particularly helpful. But no, I think I've gotten to share. Obviously, if anyone is interested in investing in Washington State, or if I can just even be an educational resource for people, like I am passionate just about talking about the benefits of real estate. So I'm hoping that this conversation helps people. I'm happy to go deeper into, some of these strategies that the wealthy have used for many, many years, and I
Right.
just don't
Yeah.
think they're widely out there. You got to do your own research, but when you really look into, high net worth people, they all own real estate for a reason. So I would just continue, talking to people and pushing people to look into it a little bit further.
All right. Great. Now, where can our listeners find you or contact you if need be?
Yeah, Lauren at veritasequitypartners.com, or feel free to DM me on LinkedIn. I'm on LinkedIn a lot, and I try to put a lot of this content out there. So you feel free to follow me there and reach out to me there, Lauren Rogers on LinkedIn.
Amazing. Well, that's all we have for this episode of Beyond the Blueprint. I want to thank our guest, Lauren Rogers, for her insight and expertise. It's been a real pleasure. I am your host, Jeff O'Donnell, and we hope to catch you on the next one.
Thank you so much.